Good morning, traders. Welcome to the Stock Market Morning Prep video for Tuesday, September 29th. We're getting into the last couple of days of the month. Let's see if the mutual fund inflows really influence this market here to the upside. We really got crushed yesterday. Literally just, we had a little bit of a pop in the pre-market, and then we've been selling ever since. Very little movement to the upside to get short, but nonetheless, we really sold off. We were looking for that sell-off, and we've been getting it. Now we're getting into an area where I want to show you some indicators. We're not quite at the washout levels. Does that mean that we can move further to the downside? Absolutely. I'm looking at downside targets really around, and I'll show that to you in the spiders. But on the ES, we're looking at somewhere any areas of 1860, 50 area, and then 1825 would be the next two targets in the ES. However, we're not there yet. We're trading a little bit up on sort of a little bit of a relief rally, but markets look pretty ugly out there, guys. And remember, we still are in some seasonal weakness going into at least the third week of October to the fourth week of October, where, if at all, we will see some sort of reversal. It usually does happen. If history repeats itself, seasonality trends, right now we are in the weakest time of the year. And again, getting into the next couple of weeks, maybe 3 weeks out, we should see some stability here. So we're still looking at, for some downside, looking to sell rallies, good rallies though. Remember, we're not looking to get short really in the hole in this area. We don't want to do that. And yesterday was a classic point, speaking to a lot of traders, getting stopped out. I mean, you can't looking for an area where you're looking to either buy or looking to short, and the market was just relentless. So you couldn't really short unless you had a real decent sized bounce into resistance. Trying to buy the market yesterday was just unheard of. Market just continued to move south. So sometimes it's always good to step aside and let the markets digest the move, and then look to pick a good opportunity, good point of entry. Okay. Anyway, right in front of you is the VIX. You can see here on the daily chart of the VIX. We'd like to see this break out to the outside of the Bollinger Bands, or at least touch it. You see we get a little bit of a pullback here. These three areas we pull back. Again here, pull back. Here was beautiful area, pull back. And now we're just really flagging, right? This is just a bull flag, excuse me. So a bull flag means higher prices for the VIX, lower prices for equities, right? It's inversely correlated. So we need to see, I like to see the VIX break out outside the Bollinger Band, produce a sell signal for the VIX that will produce a buy signal for equity. So we're not out of the woods yet, guys. If you're looking at the VIX, you can see the MACD here starting to curl up to be bullish again, and RSI broke above 50 with plenty of room to run to the upside before it gets oversold again. So that tells me we still have some further movement to the downside. Let's take a look at some other indicators. Here's the bullish percent SPX. Again, not even close to washout levels, although we're getting there. So that also tells me that we have some more movement to the downside. And again, what this just did is alleviate some oversold readings, and now we're starting to cross back to the downside on the MACD. RSI up above, not even close to being oversold. So again, this indicator has room to run to the downside, looking for lower prices in equities. Here is the McClellan Oscillator, one of the most reliable indicators of overbought and oversold readings in the market. Negative 46 here, getting there. But again, washout levels, negative 60, 70, 80, 100. That's what I want to see. Maybe make that higher low from this previous low and then start to turn back up again. So we still have some downside movement here to come, guys. We're not quite oversold at the moment. In the shorter term charts, we are, yes, 15, 30 minutes an hour. But we still are looking for some further movement to the downside. If we get a reprieve rally, maybe a bounce up a day or two, because we do have mutual fund inflows, I do think you will still see the lows between now and the end of the month. That's my guess. Right now, just want to see how the markets are going to react. Remember, things do change, especially rather quickly in this type of market. Okay, let's just jump into the index and just show you where we were from yesterday. As you can see here, we're approaching the level. Actually, we almost really hit it. That's the one area I'm looking at, and then of course the August 24th low. So keep an eye on this. You can see here we're still not oversold in these in RSI and MACD, so we still have plenty of room to run to the downside. Definitely volume market and distribution day. Okay, take a look at the IWM now. You know, everybody's talking about the IBB. You know, and definitely added fuel to the fire in the Nasdaq. It is definitely weighted. Biotechs are weighted in the Nasdaq, and I get it. But if you want to look at really where the culprit is, it's the IWM, it's the Russell. It's not the IBB. Even though the IBB did get killed and it did help, but right here, IWM at the lows already here, guys. This is we've already tested this low. Remember what I mentioned. The Russell 2000 has capped and topped the market in 2000, 2009 as well, and it looks like it's doing so again. So this is something that I believe is the leader to the downside, not the IBB. Although it did help, right? But I do believe that this is the leader here to the downside. And you'll see it in the Qs. All right, take a look at the transports. You can see this here. Leader, our first leader, Russell, our secondary leader. Now Russell is leading the market lower with the help of now the transports. As you can see, it's not right quite there at the August 24th low, but right now if we lose this area here, 136.85, rest assured you will see the lows here on August 24th. Okay, take a look at the diamonds. Again, ugly chart. We just said we would see this September 2nd low. We did that yesterday. We break this today. If it doesn't hold, you will see the August 24th low. So what does that mean for your portfolio? Hedge, hedge, hedge. And obviously, you're not going to hedge down here. You want to hedge when we rally. When we get the next dead cat bounce, guys, either you hedge or pull some money off the table, okay? You don't want to just sit in here with a deer in the headlights while the markets are just really selling off hard, and you've held through a lot of pain. That's not what you want to do. Either be proactive, either sell some securities now or hedge yourself against the long until we get that seasonal strength time of the year, which is probably going to be in the next 3 to 4 or 5 weeks. Okay, setting up for that Santa Claus rally. Again, not going to say that it is going to happen. We are up six years in a row. The Santa Claus rally couldn't possibly not happen. Nobody knows until we get to that time frame. Okay, so let's just keep an open mind on that. Here's the diamonds, and lastly is the Qs. And you can see what I mean by the Russell and the Qs. And even though the Qs are heavily weighted in technology, of course, and of course biotech, the Qs are not even close to being down at the August 24th low, where the Russell has already met its target to the downside. So Russell clearly the leader to the downside. Pay attention to what it does along with the VIX and your favorite indicator. Make sure your analysis agrees with what I'm telling you before you do any trading. Have a great day, everybody. Be safe out there. We'll speak to you tomorrow. Take care.